Hey everyone, and welcome back to the Tesla Stock Podcast. The drama surrounding Tesla has reached a fever pitch. When one of your biggest, most vocal bulls on Wall Street tries to offer a solution to help you, and your public response is a blunt shut up, you know things have reached a new boiling point. With the stock struggling around the $315 mark after another brutal day, we need to talk about the growing revolt on Wall Street and what it means for the future of the company. The main event that has everyone talking is the public clash between Elon Musk and Wedbush Securities analyst Dan Ives. For context, Ives isn't just any analyst. He has been one of the most bullish Tesla observers on Wall Street for years. His price target is $500, the highest of any analyst tracked by FactSet. He is, by all measures, a huge supporter. But on Tuesday, after Tesla's stock slid nearly 7% following Musk's announcement of a new political party, Ives published a note headlined, "The Tesla board must act and create ground rules for Musk. Soap opera must end." On X, he proposed 3 recommendations for the board. First, create a new pay package for Musk to get him the 25% voting control he's been asking for and merge with XAI. Second, establish clear guardrails for how much time Musk has to spend at Tesla. And third, provide oversight on political endeavors. Now, even though Ives' first suggestion was literally designed to give Musk the voting control he has long sought, Musk's public reply to the entire post was just 3 words. "Shut up, Dan." This stunning dismissal of his biggest supporter has sent shockwaves through the investment community and signals a potential tipping point in the Tesla story. The financial fallout from this political soap opera, as Ives called it, has been immediate and severe. Monday's nearly 7% plunge wiped out a staggering $68 billion in market capitalization. To put that in perspective, that's more than the entire value of Ford or General Motors, gone in a single day. Musk's personal net worth, according to the Bloomberg Billionaires Index, dropped by $15 billion in one day alone. The stock is now down around 25% for the year, making it by far the worst performer among the tech megacaps. And this isn't just Dan Ives raising the alarm anymore. The backlash is growing broader. Analysts at William Blair, another firm that has been bullish, downgraded the stock from a buy to a hold. They wrote, "We expect that investors are growing tired of the distraction at a point when the business needs Musk's attention the most, and only see downside from his dip back into politics." Hedge fund CEO James Fishback, a Trump supporter, even postponed the launch of a planned Tesla-focused ETF, stating bluntly, Elon has gone too far, and encouraging the board to meet immediately. When multiple ideologically diverse corners of Wall Street are all saying the same thing, it is a signal that the CEO's actions are now being viewed as a direct and material risk to the business. And while this high-level drama plays out, a quieter but perhaps equally important story is unfolding at the product level. An arbitration ruling has forced Tesla to refund a customer their $10,000 payment for the full self-driving package, plus legal fees, for failing to deliver on its promises. Reports indicate similar claims of deceptive business practices are now popping up in places like France. This is precisely what analysts mean when they talk about the cost of distraction. The company's most important future product, the one that underpins the entire robo-taxi thesis and the stock's massive valuation, is facing legal challenges for not living up to its own hype. This raises a critical question for every investor. If the company is struggling to deliver on its core technological promises, while the CEO is embroiled in political battles and public spats with his own supporters, what does that mean for the future? Can the company truly execute on its world-changing ambitions if its leadership is so deeply sidetracked? It connects the political chaos directly to execution risk, and that's a combination that makes even the most bullish investors incredibly nervous. So we have a CEO publicly rejecting advice from his biggest advocates, a broad Wall Street backlash with very real multi-billion-dollar consequences, and underlying legal challenges to the company's most important technology problem. It is an incredibly precarious moment for Tesla. This brings me to my question for you. Has Elon Musk's behavior finally crossed a line for you as an investor? Do you agree with analysts like Dan Ives that the board needs to step in and establish some guardrails? Or do you believe this is all just the necessary chaos that comes with backing a visionary CEO? Let me know your thoughts down in the comments section below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an. Thanks for listening, and we'll see you next time.